The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Hi, everyone. Basil Chapman sitting in for Steve Rhodes. My pleasure to be here. Usually I'm in the next hour, the 11 o'clock Eastern Time hour, 11 till 12. So this is a pleasant change for me just to step in and be of assistance. And, of course, I'm part of the TFNN team, and my service here is called the Opening Call. It's a daily service, a very comprehensive look at the markets, different parameters I give, different chart patterns, what we're looking at in terms of possibly going long or short, whatever it is. And even more importantly, I give a trader's corner. That's the last chart that goes out. My charts start coming out at about 6:30, 7 o'clock in the morning. By 8:35, it's the final chart. It's called the Trader's Corner. And in that, I have all our positions and positions that we intend to either look at or possibly get. And we have a mix. We have a mixed portfolio. We have longs and we have shorts. Longs seem to be doing nicely. Let me just double check before. Yep, very nicely. And the shorts that we just started implementing yesterday are, in fact, doing okay. One is actually doing quite well. The other is just about unch. So here we are. This is the Wednesday edition, Wednesday, July the 2nd. I should know this very well. I have a family member that is having a birthday. And so July the 2nd. And what are we looking at here? We're looking at, if you're looking at Tiger TV, you will see, this is the way I set up my charts. I have the daily. Let me move this away for a second. Then I have the weekly right there. And then I have the monthly right there on the right. So left side, daily, right in the middle, weekly, and on the right is the monthly. And I notate them with the Chapman wave. I'll explain that in a moment. But basically, I always show, when we start my program at 11 o'clock, I show that there is a 120-minute chart of the E-minis, in this case the September 2014 E-mini contract, with the daily having made a peak G/C, and I'm suspecting it's really a C and not a G, because the MACD's okay. It's about to, well, it's trying to cross positively, but it hasn't yet, and the stochastic's at 83%. So my suspicion is that there's enough energy to pop one more time to a nominal new high, and then we're going to have a big test of where we are and what we're doing. And that'll be above 1971.75. And right now, E-minis are 1965.75 unch. But look at this. See on the right here, this chart, there's a low bar with an up arrow, and it goes peak A, B, C, and then a D at 1971.75. That is in the context of the Chapman wave, that is what we always look for. We look for the lowest, most identifiable low bar, and merely want to go successively higher to a peak A, and then 1 penny above peak A. If there is a peak, in other words, you're going to make a down leg, even if it's 1 penny, before you can start the next move up, to start the second leg B. And you expect to get to at least a peak D, the fourth leg. And then you've got to be somewhat careful. Well, lo and behold, we went right to a peak D at 1971.75. And then there's a pattern that I drew. I had actually drawn it yesterday. I extended it, and that said, watch out for a rectangle pattern. And the rectangle pattern says that the low of 1964.50 is kind of key, because if there's a dip down and goes back in, that's good. But if there's a dip down and it starts to go underneath to the 1962 or lower area, that's not good. You've broken the rectangle. And I always say rectangle formations can last a lot longer than your patience. If you've ever traded a rectangle pattern and you know that your mindset is that it's going to break up or break down, and every time it gets close, you go short, that's exactly where you should be going long. And every time it goes to the upside and you think, oh, it's going to break out to the upside, that's the time to be shorting. So it's a concept that you got to, and you could keep doing this for quite a while. These things can last. In this case, it's the 120-minute chart. I've seen these things last for the record that I can recollect was about between 9 and 11 days. I once showed it in the chart before I'd gone away, and it was still there when I came back, that rectangle formation in the 120-minute chart. So what we're looking at is, in this particular instance, a break above 1971.75 that holds will be very positive. You can start to count the waves on the upside as an inside buy mode. Meantime, we're just stuck in this little range for now. So let's go through numbers, and let me just go through to right here. So the Dow is up 14, S&P up 14 at 16,970, having made a new, let me just do this so you can see my charts at the same time. INDU. So the Dow broke out to an all-time high. I've got this as leg E, possibly E/B in the daily. MACD hasn't crossed positive, and the stochastic still at 62%. That's not great action technically. And the weekly chart has gone to a leg E. I must type that in now. Leg E with a fractional 1 week slightly lower high. This is a very quick D's to E. You've got to be a little bit careful. So at this particular point, I'm just going to tell you near term, 17,020 to 17,050 will be the resistance, and 16,920 to 16,880 is going to be very, very important support. 16,893 is the 9-period exponential moving average support in the daily chart. Now, the 120-minute chart is suggesting that we should still get one more pop to a leg D, just above the previous high of yesterday, and then we've got to be a little bit careful. Now, there's been some talk about the 17,000. When you get to these millennium numbers, there's a difference between slicing right through, in this case, going to 17,150 to 17,190 in a single move up, or just hanging around and not being able to close above it. So let me just say that the parameters distinctly say a very strong move this week or very early next week into the low 17,000s would be a big positive. If it just stalls here, watch out a little bit, because we could be taking a little bit of time before we can break out upside. The S&P SPX.X has, in fact, a leg C as well, peak C made right there. And should, oh, did I miss something? 1957.51. 1957.26 makes a peak. 1957.71. Oh, there it is. I knew there was a little problem right there. We have a peak D in the S&P. So it's just the divergence between the Dow and the S&P. There you are. And so far today, the Dow is just a fractionally higher percentage, up 0.08 to the S&P, which is only 0.01. Now, I had a couple of questions in the den, and I'll go through them as we move along. So that's the S&P. S&P boundaries, a break to the upside above the high yesterday of 1978.58. Says you can go to the 1962, 1965 area. That'll be a very big thing. That'll really help the Dow. And if we start to fail, watch out if it goes underneath 1963. It's at 1973 right now. 1963 says, uh-oh, single move up. And I just need to show a chart right now that I showed my subscribers to my opening call. This is the chart we're looking at. There's a comment, one little bit of commentary down right in that rectangle. I have another bit of commentary on this chart that I add later on at the end of the day. And I wanted to explain that this bar right here, the 18th of June, that's what I mentioned to my subscribers yesterday. There's a possibility that if we broke over the maroon line, the 9-period moving average, we could, in fact, have a very matching bar to that. Well, we went to an all-time high and then pulled back and closed underneath the previous high of 16,978. And that says there's a good match so far. It means that we might have another day or two, and then you got to be somewhat careful. Maybe next week we bump into some resistance. But at this point, I'm waiting to see if the MACD crosses positively and the stochastic can get up to 80%. To go to all-time highs without that stochastic is very unusual. So let's go back on the notations. You got the QQQ series. And the QQQ series, we've gone to a peak C. Thought we'd make the D, and we haven't done that yet. And in this particular instance, it's leg C in the daily, peak C in the 120-minute chart, leg E/B in the weekly chart, leg F in the monthly. Very, very strong. And here you've got 93% in the stochastic, and MACD's crossing positively. That is very important to keep a note of. And so that's the QQQ Trust series. This is the NDX 100. If we go to GC, I was asked about the IWM. IWM has gone to a leg, possibly a peak E, and this is recycled. That's just kind of what I'm going to call it for now, and an E/A in the weekly chart, and an F/B in the monthly chart, and the 120-minute chart. I'll do it for you right now live. And don't forget, 877-927-6648. That's the number to call in for if you want to speak to me. And let's just go A, B, yep, peak C as well. Interesting, isn't it? Well, all of these are suggesting that there will be another pop-up either later today or tomorrow, or tomorrow to get your D. So I'd say to subscribers, would not be surprised if we get the got distracted. I had a question at the den. Basil show's an hour early. No, my show's not an hour early. My show's a regular time. I'm just sitting in for Steve Rhodes today. Steve did a great show this morning for an hour, and now he's taken off because he wasn't feeling that well. So get better soon, Steve. Now, let me just draw one line. One trend line can make a big difference here. Here it comes. Look at this. Trend line goes like that, and I'm just going to put it right there. So here's a trend line that looks like you're bumping into resistance in the IWM, which is the iShares of the Russell 2000 ETF, has pulled back. It has every indication technically that it made a D, but I'm calling it a C. That's what it is. It says there should be one new high. And if it's not today, it should be in the next day or two. And then you've got something very interesting because the IWM breaks and closes on 118 anytime in the next 3 days, 4 days. Then I would say to you, be careful because there could be at least a short-term top here. And if it clears 121.30, that's going to be very good action. It's trading at 119.54, down 48 cents at this particular time. So I'm going to go to the next thing, and I wanted to do this because it's GCQ14. That's how I get the gold futures. See, gold futures are also trading in this rectangle formation, a little wider. In fact, it's more like an oval pattern. Let me show you. I had a good question. I'm going to get to that. I have some emails. Good questions. I love these questions. Okay. Yeah. Gold has got a big range between 1334 and 1328, 1322. And it's just stuck in the middle in the 120-minute chart. And that's telling me that the daily is acting very well. 1317 is going to be very important support. A breakout above 1339.90, the high of yesterday, would be very positive. And so far, gold is having a high-level consolidation. Actually, not even a consolidation because it made a new recovery high yesterday. Let me just quickly go to these. I wanted to talk about bonds. Bonds right now are down 19-30 seconds. I'll talk about that when I get back. Basil Chapman sitting in for Steve Rhodes. This is the Money Masters, and I'll be back. Dow plus 10, S&P up 148.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman. Technicians this hour is the next hour. I am the host of Technicians this hour, but I am sitting in for Steve Rhodes. Steve Rhodes is not feeling that great, so I said, okay, no problem. I will sit in. I have the time, so I'll sit in today. And I'm here in the Money Masters show for Steve, and it's my pleasure to be here. But most importantly, I had a couple of questions in the den, and I'm going through these charts one by one. And I just wanted to show you that the TLT, which is the Lehman 20-year T-bond fund, has given back a chunk of the most recent gains very quickly. Speed of the gap downs is very important. What I'm looking at here is I'm saying to myself, there was that former support. See this up? Let me open this channel, open up this page right there. You'll see this very long-term channel that bonds have been in since March. This is a daily chart, so it's quite a long-term channel that is steady. And then out of the blue, at 111.02, it suddenly slides underneath the support back in early June. And there's a form of beautiful support, what I call the inside track, where it goes from the one trend line, uptrend in this case, uptrend support, the little trampoline, the little green line is a trampoline, and it springs down, and then it pushes you to the top, and you've got, what's an upside down trampoline, an umbrella at the top, so that you're contained within this channel, and you get to the dashed line, and that's where one has to be careful because it starts to pull back. Then out of the blue, instead of holding it, breaks down, tries to go above it on the 6th of June, pulls back, goes to a low, and then you treats that line as a most beautiful resistance line. How one single line can be so important. It's fascinating. Now it's repelled, and it comes down, and we're going to see how the 110.74 level acts as support, if it does act as support. I mean, Yellen might be saying something today that says, basically, you know what, we're kind of done. Everything's coming right, slowly but surely. We're just going to decrease our bond buying, whatever it is that she says. Then what we're going to be looking at, I'm going to get to some of these charts a little later on, but I want you to show this whole yield, that the surrounding FX and FX of the bonds moving up and down. This is the yield, and the yield moves inversely to the price of bonds. In this case, the white is the 30-year T-bond yield, TYX, and look what it did. It went to a trough E. Oh, let me just quickly explain this now. I'm a third tangent off, but I need to show for those of you who are new to my work. This is my Introducing the Chapman Wave Methodology CD book that is only available at TFNN. The concept of this is to be able to get you from a most identifiable trough. And here on slide 22 says the function of the peaks and troughs. The premise of the Chapman wave methodology is to identify a low bar from which higher peaks can be notated, that is, labeled and essentially graded. In that context, you will see charts notated from an up arrow all the way to a peak G. On the downside, you will see troughs, that is the V-shaped low points, lower lows, I should add, noted down to a trough G. All of this will be discussed and demonstrated thoroughly, enabling you to identify these same sequences. So this is just a price chart, right? There's nothing there. But when you start to add the peaks with identification numbers in this case, look what happens. You go peak 1, 2, 3, 4, and the object of the Chapman wave is to get you from the most identifiable left side low bar to the most identifiable right side at a peak 4. And that's where you've got to be somewhat careful. It can go higher. We'll see that it can go higher. And one of the reasons why I decided not in the 1970s to label them peaks as 1, 2, 3, 4 in numbers, but to use letters is that Robert Prechter at the time was really big on CNBC, and I had just come from being on TFN. The financial network, TFNN, I think, TFN it was called, here in the local area, giving a call every single day on the market. And I thought, all right, well, I better be careful. Yeah, I don't want any recognition of the Chapman wave to be related to the Elliott wave, which I tried to understand. I never really fully understood it. It's very complex, and there are many alternatives. And I thought it was something quite as clear as this. Most of the time, it's very clear. The Chapman wave, I would go with letters. So I changed it to letters. And just like on the piano, where in music you can't go anywhere above a G, you can't go C, D, E, F, G, A, B, C. You can repeat the C, but it doesn't go to an H. There is no H. So in the notation of the Chapman wave sequence, there is no H. G is the maximum. If you go to a G and it goes higher than that, you've got to say, hey, I think I must have mislabeled something, or I might not have identified it. And then all we do is put in the arrows, and these are the arrows. So I'll show this for a moment, and I'll be right back. Basil Chapman, sitting in for Steve Rhodes, and I'll be back and we'll look at some of the questions I have in the chat.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, Basil Chapman sitting in for Steve Rhodes. I'm back and I'd love to take your calls at 877-927-6648. And had a couple of questions. Let me just quickly go back to the bonds. I don't think I finished my thought pattern there. Bonds are plunging. Now they're down 26, 30 seconds. That means yields are starting to rise. We've got to be a little bit careful here because the weekly chart has made a peak D and it's right on. This is the first time it's challenging the 9-period moving average as a breakdown. No, it's not. It's 1, 2, 3, 4, 5 weeks in a row. It's set beautifully. But I would have to say that under the circumstances with the MACD and the weekly turning down, stochastic back at 67.60, this is the first time that it's going to challenge that 9-period moving average. And it turns out to be a coincident trend line support right there in the weekly chart of bonds. Now, let me go to the actual contract itself, USU. I don't know if I've got it updated. Yes, I do. Same thing. So it's the same thing. And bonds, if bonds break from 135.17 right now in the September contract, if they break down and go under 134 at any point in the next 3 to 5 sessions, we'll see how this corresponds to a rally in the stock market as money comes back out of bonds, back into stocks, into equities. We'll see. This is a very interesting period. My suspicion, based on this particular chart right here, is that this week, the close tomorrow, the market closes at 12, so I'll be doing my show, and that wraps it up for the week. It wraps up the market for the week. And next week's going to be really important because if there's a close next week in the yield, the 30-year yield, that goes above 34.99, that starts leg C, and that suggests that it'll still go to a D in the weekly chart of the 30-year yield. Now, look at the 10-year. It's running a little bit. It needs to break above 26.59, 2.659. If it goes even a penny above that, it starts another leg up. That'll be leg B. And the 5-year is just stuck in a trading range. I'm not sure it's going to get much higher. So we might start to see something happen between the yields, the 30, the 10, and the 5 in the next week and a half. And that's going to be quite important. So I'm watching this very closely. Those are the parameters I'm watching. Bonds, my thought that I had earlier on was that in this particular pattern, there's a chance that bonds have made an H that goes to an M pattern, and that makes the area of bonds in the September contract the 134 and 20/32 low of the 20th of June and the 134 and 15/32 low of the 5th of June. Very important. A close underneath that says, uh-oh, now yields could actually start to go, and they could go very quickly to the upside. My gut is saying that we're getting closer and closer to an expansion in the yields rather than this narrow trading range we've been in. But they might do their very best to try to keep it contained for a little bit longer. We'll see. So then I had a question on what was it? Would you look at? Okay, there's a good. I'm involved in very much in the aspect of looking for the last 30 years at least at skyscrapers as indicators. It's almost more, from 19, at least 30 years, as a skyscraper phenomenon. Man's icon to his ego, a time freeze of hubris. That's what I call it. Not that I don't love skyscrapers. I just love the whole concept of Otis Elevator. You could not build the Empire State Building until Otis Elevator. All the technology came together to be able to build a building that can take you up to the top floor as quickly as it needs to be, and all that stuff comes together. And that's what's happening in a technological age, an incredible age. And we'll see if that happens. And I'm suspecting in the next 6 to 8 months, in the United States, there's an announcement that we're going to build the world's tallest building. But right now, Jane the Den said, New York Post, Larry Silverstein to build city's tallest apartment tower. I mean, it just keeps coming. Every week I'm showing something. In the Boston area, we're starting to build the tallest buildings that we've ever built since the John Hancock back in the early 1970s. So let's go back to the question here. Pot was one of them. POT, that is part of the potash core, Saskatchewan, makes potash, develops potash, etc. Made a peak being the daily at 38.58. It's pulled back to the 9-period moving average. That 9-period moving average is really important because it says it's held 1, 2, 3, 4, and maybe today's the 5th day. And if at any point in the next 2 sessions it goes above 38.30, somewhere around 38.30, it says, good chance I'm going to make leg C up above 38.58, and that will extend 38.58 to 38.58 in 2 weeks. This is the 3rd week. Doesn't look like it can do it today. So this is going to be a peak D right at, I love to use certain moving averages. Look how the moving average in potash was tremendous repellent. Couldn't break above it and hold. It kept pulling back. It was a repellent line. And then finally it starts a brand new buy mode. And in this buy mode, what is potash do? It climbs and climbs and climbs, walks the 9-period moving average in the weekly chart, and then finally gets back to that 200-period moving average. So I suspect in this area between, it's at 38.06, I'm suspecting between 39s and 36s is a congestion area that'll be taking place in the entire month of July. If it snaps through it and gets to 41, that's really good action because it turns this whole area of 38.50s, the 200-period moving average, into a base of support. Monthly is improving steadily, but I get a little nervous when I see a fairly sequential peak A, then a B, then a C, then a D, and we're in D right now, leg D. If there's no new high this month, I think there will be, but otherwise it's going to be a peak D. So going on, I need to look at I've got something going on right now. Well, that person will have to wait a few minutes. I forgot about a meeting I had. So that was potash, and the weekly chart, as I said, that's what we're looking at. LVS was the other question, and LVS, I don't know how to get a message there to the person waiting. But that's it. Anyway, LVS is trading at 78.17, up 39 cents. Leg E with good technicals in the daily. Weekly it needs a lot of action, and let's see if we're able to. I'm just got a question in you. Make a break. Okay, there we go. Now, so what we've got here is in the potash itself, LVS. The monthly chart has made a peak. D is holding 9-period moving average of 75.57. It's acting very well. All I can say is if you're long, stay long. But if it starts to close on 2 or 3 consecutive days below 75.92 to 75.57 in the next week, be a little bit careful, take something off. In the meantime, I'd hold it and I'd start to raise a stop in one position. If it gets to 79, I think it's going to have 78. 60 to 79, I'd raise a stop in some part of my position. And so that's that. And I'm just going to have to push along. And other questions, let me just see if they're coming up here. And give me 1 second. I'm just going to say, here it goes. I'm going to yell, but it's got nothing to do with the show. I'm just yelling. I'll be with you in 5 minutes. How about that? Okay. So here we go. Looking at going to the next chart, what I wanted to show you is this, and I think this is going to be very important. The IYT. The IYT is the iShares Dow Jones Transportation Average Index, and it's the fund, and it's in leg E, a huge leg E in the monthly chart. It's in a leg E in the weekly, having gone very quickly from a D to an E within an up channel, and within the up channel's inside track. I can't show that right now, but maybe I'll get a chance during my show to talk a little bit more about him. And that inside track has resistance. You can see that green and red line there if you're looking at Tiger TV. Well, as it moved along, it stopped right at that peak E. But the MACD is very good, and the stochastics at 90%. So I'm going to be watching the IYT. And the only thing that probably could do some damage here is if crude oil suddenly spikes up. Not only that, you've got your A to B equals C to D. This is the classic Tiger, A to B equals C to D. And that says it should get to the 149.18 area, and it's at 147.82 right now. Let me just, can you make a break for earlier? Yeah. Question to my engineer. Those are hard breaks. I can't do it. Okay, so I don't want to say, I know exactly what I can do. Let me see. I need to do this because someone I'd complete if I didn't know I'd be doing Steve's show. So give me 1 second. I'm going to be talking, but it'll be faded for a moment. The next break. There you are. So this is a very interesting thing because we've got a move that says that the MACD is not crossed positively in the daily, in the IYT. The stochastic is at 81%, but the price is not being confirmed by a really good bout of strength in that green line, that what I call the fast-moving average of the MACD. It needs to cross decisively above. And that's saying to me that there's a chance that we're just coming into a little period. And let me go back to the daily chart here of the Dow. Remember this daily chart that I was showing you? Well, this cup formation very often hits resistance just above the previous lip. That's the left side peak that was made. Look, it's done it so many times. It makes higher highs, but it keeps coming back for this ellipse, this cup formation to consolidate, another cup formation. So I'm looking at this and I'm saying, unless the Dow spikes sharply higher, really takes it out with one of those Chapman wave cup and ladle breakouts that says you're going to a D and a sharp D to the upside, I just have to say, be a little bit careful here, be selective. We have some shorts, and one of them is actually working very nicely with the market huge up yesterday and up a little bit today. It's just acting very poorly, and it's one of those stocks that really should be doing well. So in this particular context, what I'm going to just suggest is this. The IYT should worm its way to, this could be a G, but I'm calling it a B for now. Everything says it should be a B. Just above 148.78. It did have a 147 round number low yesterday, and that's something I must watch. But in this particular instance, I think it's going to go a little bit above 148.78 into the 148.80 or 90 area, maybe pull back, and then have a leg D. And if that leg isn't very sharp, and I really mean sharp, so that it can get up to that red line in the up channel, that says be careful, because this could become just a sideways consolidation in the transportation average. Let's just look at the XAL, and the XAL, in fact, is peak A, peak B. It looks like it's going to be a B today. Made an E at 88.67 in the daily. It's pulling back. Made an E in the weekly. This is the airline index. And I've got an F, but it could be an F/B in the monthly. But in the meantime, I'm not going to look at the monthly. I'm only looking at the weekly. And the weekly says, hey, be careful. I'm having a tough time rallying. I'm also having a tough time breaking down, so I could just be trading sideways here. The next 2 points in the XAL up or down are going to be very, very important. So that's that. And I also want to talk about the XLU, which is the XLU is the S&P Select Utility Spider Fund. Making a potential peak E if there's no new high this month above 44.36. That was the high of last month. So for 44.28, that's just 8 cents away, 9 cents away from a new high. This is going to be very important. Made a peak F, making a leg F, possibly a peak F in the weekly if there's a break below 42. Let's call it 41.80. Is that right? Yeah, the low that's important here is 41.63 from the week of the 13th of June. So under 41.80 says be real careful, because this could be a top of significance. But I'm actually looking at it and saying peak D in the daily. I would not be surprised if it too just goes into a trading band here, maybe slides down to the 41 level with the 44s is very strong resistance, and it really makes a full a rectangle, or maybe even, here we go, maybe even that, a very big oval pattern. And that's kind of what I'm looking at for the utilities right now. So as it stands, I'm going to do this. I'm going to say XLU made some kind of a top here, maybe a top of consequence short term. We'll be seeing it because it's going to go together with, don't always go exactly together with bonds, but rates related, and that's what I'm looking at. And most importantly, in this particular context, what I'm looking at is I want to put it together with, say, if you look at the EUR USD, I want to put this whole thing into some kind of a there we are. So some kind of sequence that you're looking at all the different parts of the puzzle. You see the euro has made a peak C, and technically it should make a D because the stochastic is at 88% and the MACD is still good. The weekly chart, not great at all. It's struggling to get above the 9-period moving average. And the monthly chart might have made a peak F just above the trend line resistance right there. So I'm watching the euro real closely. I thought it would get to a D. We'll see if we can get to a D, and then that's going to be very important how it holds 1.36. Right now it's at 1.365. Down just a fraction. So this is all going to be very important, because if it closes above 1.36997, that's going to be very important in the weekly. So here comes that break I needed, just so I can tell the person outside he's going to have to wait another little bit for me. But in the meantime, I'll be right back. Basil Chapman, sitting here for Steve Rhodes. My show is coming up for the next hour, and the Dow 17 S&P's up too. I'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage at TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Dow's up 15, S&P's up 2. Now, as I said before, in this particular market, I think it's really important that you identify the sectors that are becoming weaker and stocks within sectors that are becoming weaker, and the stocks that are now the sexy stocks, the ones that have the pizzazz, the ones that have the name, the cachet. And they're obviously the momentum stocks that took a huge hit on the way down into April's lows, and now coming back really strong. Some have gone to new all-time highs, and others are on their way to at least try for those for those previous highs. I have a stock here that's not that familiar, but it's in that category. It's Wuba. Wuba is 58.com Inc. I think it's a Chinese internet. I don't know. I believe it's a Chinese company. I just can't remember. It's trading at 57.19, up 4.05. And it's like a Craigslist of China. Thank you. Well, gosh. Well, there it is. It opens up in October at a round number 21 low, makes a round number 27 high. I love these round numbers, especially at the IPO openings. And then what happens is it takes off the next month. So that was in October, and it takes off and it goes all the way to 58.89 in March. Takes a huge dive, 35.75. I mean, there, yeah, 20 bucks. And then it rallies very strongly, and that's the monthly. And I suspect it's going to make a leg B above 58.89. Could do it within the next minute or two. It could do it by tomorrow, Monday. Now what's really important is that in the weekly chart, nothing really broke. It started off its buy signal to buy mode back in the week of November the 1st, 2013, went to peak A, went to peak B. Remember what the object of the Chapman wave methodology is? To get you to Ds. And what does it do? It goes to a C, all the way to that 58 level, and then takes a dive. And where does it go to? Look how powerful that 200-period exponential moving average is. And that's how did you care about the 200-period moving average when you were up there? No. Did you care about it when you were at 47? No. But did you care about when you started making that 9-period, that black line, the 9-period moving average resistance? Absolutely. And then what happens? It doesn't touch it on the way down. It just misses it and goes in a cup formation. In my Chapman wave CD called Introducing the Chapman wave Methodology. Maybe I'll get to it in my show coming up in a few minutes' time. I'll talk a little bit more about it. I don't want to take time now because I've had a bunch of questions still. So I'm expecting that there will be a leg D, and it'll be a leg D slash, with that old one, B. So D slash B, but only at this point it's still leg gray B, because it's underneath that major top of peak C. The moment it goes to 58.90, I immediately put in D slash BY, because from that low, there's a little peak over there, and I call it a gray peak because it's underneath its subsidiary. Okay, so that's it. I love it. And the question was, do I start unloading? Well, now it's gone to E in the daily, and I'm going to make the suggestion. Raise your stop on a portion. Keep a core. I would still keep a core right now, because next week I think is the week that it actually goes in the weekly to the higher high, to an all-time high. And I would keep a core. You could actually take a little bit off now to reward yourself for a spectacular run. But actually what I would use, I'd use the 120-minute chart, peak A, B, C, D, E. This is either F or a brand new B, just like this. This is matching, almost matching the weekly chart. I would do this. I'd have a trading stop of 1.5 points on some of my position. If you don't take something off now, I'd have a trading stop and just get yourself stopped out, knowing that you're liable to be stopped out in the next 1 to 2 or 3 sessions. But what a fabulous move. And keep your core. And that you'd want to put back based on the weekly chart. If it does go to a new recovery high, you want to put that back maybe in the 53 area if it pulls back. So, Basil Chapman signing off, sitting in for Steve Rhodes. I'll be back for my show called The Opening Call. Called The Tiger Technicians Opening Call. It's my daily service. Check out my daily service. You might be very interested in it. Check it out. Get 2 weeks free. I'll be back in a couple of minutes. Thanks for being here. And stay tuned.
Since 1984, Basil Chapman has been using the Chapman wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.